The markets in the week quite bearish. My name's Des here at Grok Trade, and this is the weekend edition. Good through Sunday, March 8th, 2015. And this happens to be the weekend that we go to daylight savings time. So make sure you spring forward an hour. It's always interesting to lose an hour's worth of sleep in the morning. I'm more of a night owl than I am a early bird. Let me know if you're a night owl or an early bird in the comments below, because it's useless facts. Anyway, let's get going here on the markets. Sizable drop off closing out the day on Friday. Dow sheds nearly 280 points. All major indices down more than 1%. Dow is down 1.5%. However, the thing I want you to pay special attention to is this bank. The bank was positive ending out the day on Friday, up nearly 0.5%. So remember, the markets are only as weak or as strong as the supporting financials that are there, or lack of support by the financials. Here, the markets were down quite a bit, but the bank said, no, we're pretty strong here. Fear did go higher by 8%. Silver and gold just crushed. I mean, down 2.7% on gold. Silver down more than 2%. It's just, precious metals have just been nothing short of a train wreck. Crude oil also down 2.5%. US dollar up a whopping 1.22%. Furthermore, to bring strength to the bullish sentiment, utility sector, which is a defensive sector, okay, this index was down more than 3%. So even though we had this big sell-off, I'm just seeing some underlying indicators saying that the markets aren't nearly as bearish as what we saw ending the day on Friday. Here we are looking at the S&P 500, and this may be the last time I will be using e-signal. From this point forward, be using trading view. More on that later. But you'll see here we were going higher, 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 and higher above the moving averages. Then I brought in a Fibonacci, and these are these horizontal lines coming down. We pulled back and busted through the 25% Fibonacci retracement, made it down to the 38.2% Fibonacci retracement. So I'm going to get rid of that right now. Well, before I do, look at the 50s. See how the 50 is right here where this trend line comes up? We've been talking about that the last few sessions in our videos. The reason that's important is because I see us drifting downward to this support line. The question is, will this support line serve as support and bounce off of it like we did here and we did here? So every time we touch that line, we bounce. Touch that line, we bounce. If or when we get to this line, will we bounce yet again? If not, that will spell disaster for the markets, and we should see a pretty significant sell-off because the markets have been going higher, higher, higher. If you look at a weekly chart, this goes back to 2012. I mean, we just march higher and higher and higher. And now we start to whipsaw a little bit, whipsaw. But for the week, we're pulling back right here. So a very important line to me as a technician would be that support line. Say, will that hold? It may or may not hold. Get rid of this line. I'm going to draw another line from here to here. You can see we have a rising wedge. The rising wedge with a bearish divergence right here on the weekly chart on the S&P 500. So I think that we're in trouble. If we can remain in this wedge heading higher, and if the MACD continues to give us a bearish divergence, the longer this lasts, the bigger the correction will be. So this could correct now. This would be 1, 2. This is the third time. This third time could break down, and so it could get nasty. So something we're watching for. You certainly don't want to be long in this environment. Short term you can be, but you need to be nimble, quick. You need to be able to get in and out very, very quickly and have the strategies in place to do so with confidence. And take a look here at the month. We're just getting started here with the month, but you'll see that we have this line. Let me tweak this. We remain in this just big time uptrend. We just keep going higher and higher and higher. The problem here is we have what's called a tweezer top. This could be a signal of a top on a big time frame here. If we don't go bullish and continue to go higher, then that tweezer top, the two highs here, it could signal a big time reversal. These can be very, very powerful as far as reversals are concerned. You can get tweezer tops, you can get tweezer bottoms. Like here, if you go back here a ways, you got a tweezer top there. Those were kind of equal highs, and then a big sell off right after that. And let's see if I see any others. This was very close to a tweezer top right here, a little sell off, and then a much bigger sell off there. So we do have a tweezer top in the making here, so it'd be interesting to see if how that plays itself out. And a couple stocks of interest. Amazon was down 2%, so this is pretty weak here. Still finding support at the 2 or 20-day moving average, and I need to check if I wonder if I sold Amazon, because I was holding Amazon. I've been holding this off of this falling wedge breakout, so I'm holding Amazon from way down here, but chances are I might have sold out because I had a pretty tight stop loss on that. And BABA was down 2%. This, what I'm watching for here, is a little bit of a pullback, and if the markets do start to go bullish again, I'm going to re-enter, or I'm going to enter BABA for a trade. And GoPro was off 2.3%. Another one I'm watching for a trade. Long as we keep within the confines of this falling wedge, and if I get a breakout, that will be a buy signal for me. Netflix was down 3%, big drop. You don't want to be long Netflix at all. Tweezer was one of the few stocks in bullish territory, up 0.5%, but it's just kind of down here in the pit. Nothing to write home about. So that's where we're at. And if you want us to help you trade, we can certainly teach you by the curriculums that we have. Just go to Grok Trade and definitely take the 101 courses. Take step 2, the 201 courses. This is where you want to be. And then you will finally be able to speak the same language as the mentors and be able to be mentored. This is a mentor for life to really help let trading not be a hobby, but make it more of a career. So if you're wanting to get to a profitable level in trading, I certainly recommend, highly recommend doing the 1, 2, 3 step process. 101's very, very easy. Step 2, not as easy. You're gonna, it's gonna be a little more work, but well worth it. Step 3 is where it all comes together. This is where we help you reach your full potential in the live markets, trading with full confidence. So that's certainly the area that you need to be driving towards. Take care, and very safe trading to you out there in the live markets, and catch up with you guys on Monday.